Good afternoon. I'm Toni Valliere with Verified Investing, and this is Trading the Close. Yesterday, we had the release of CPI data, which showed inflation eased more than anticipated. The markets reacted well to that news. And today, we had the release of the PPI data, which was also very encouraging. So let's take a look at where things stand right now ahead of the closing bell just minutes away. The S&P, Dow, and NASDAQ all had an up day. Right now, we are up 4 points for the S&P, the Dow up more than 144 points, and the NASDAQ up more than 4 points at this moment. So let's bring in Chief Market Strategist Gareth Soloway with a recap of the day. Now, Gareth, I know we saw some positive gains today, but I know during your morning show, the game plan, you say you are still a little leery. Why?
Yeah, so the leeriness comes from the fact that we're not seeing some of the key components in the economy, some of the commodities rallying if the economy is supposed to be so good. So if inflation is coming down, then the Fed should be engineering a soft or no landing scenario, and we should see copper rallying and oil rallying. And in fact, oil is taking a hit today. In fact, let's flip over to the oil chart real quick, and what we can see is, take a look. So we have that head and shoulders. This is the daily chart of oil, but this is today's price action, right? And this was yesterday. So yesterday, you initially got an up move and then it reversed and closed negative. And today, another down day on oil. And again, the idea is that if inflation is coming under control, then the economy should be able to at least stay solid and maybe even start to speed up. So oil should actually be going up. And the same thing could be said for copper here as well. If we bring up the copper chart, and bear with me as I do that, here we go, right? So copper is inching up a little the last couple days, but what we can clearly see from this bigger pattern, if I flip to my weekly chart, we've already had a breakdown below key levels. So here is a channel, right, or a wedge pattern. We were chopping inside of this wedge pattern. We broke down. Now we're retracing, and we're actually into resistance here. And so the idea here is if charts play out the way they're supposed to, and generally it's about probabilities, then copper's actually going to start to go like that and have another leg down. So this is problematic, right? And I also think that it's almost too easy, right? Everyone thinks that it's a perfect scenario. Everything is perfect. It's coming up roses, as they say. And it's usually not that easy. We know from the history of the Fed that they have never really engineered a soft landing. So that's the big issue here.
And it doesn't happen overnight either.
No, and this is the thing. We're not going to know for months, if not 6 months to a year, how this all plays out. And I do want to show you guys a couple things here on the charts. So we have the S&P 500, and let me get rid of these lines here. This is today's intraday with yesterday's intraday chart. And what we could see is basically right here, this was 2 days ago before the CPI data came out, right? So we had this area here, the big gap up yesterday. And then look at what happened here. We got, again, a head and shoulder formation, and this is the 10-minute chart, and we can see very clearly that today's PPI numbers, which again were actually, you could argue they were better than the CPI numbers, the markets are just flat to slightly positive. We're not seeing that big reaction. And really, if you look at head and shoulders the way they work, we haven't broken the neckline, which is the key one. This is what's called the neckline. You take this point and you draw a trend line to this point and extend it out. If this line breaks, then you get a down move on the charts of significance. So I'm actually seeing some signals that we might be due for a pullback. The question is it a small pullback before new highs, or is it going to be some sort of bigger move to the downside where reality starts to not look so rosy?
Speaking of highs, it was a big day for Target. Explain that.
Yeah, so let's take a look at Target real quick, guys. This is a fun one because Target is up about 20%, 18% on the day. You look at this chart, right, and it doesn't, that doesn't look like a big move because the stock had just been so demolished over time. And if I zoom out, we can see how much it had come down. Stock was trading at $260, basically came down to 100, now back to 130. And the beautiful thing about this is if you're just looking at charts, you could kind of see that we were sitting at support. We look at this, and I showed this in my game plan today here. Look at this area right here, a beautiful trend line that really we got right down to. And again, think about a floor. So we talk about gravity. A ball goes up, it comes down to a floor. Here's your floor. When it hits the floor, it usually gets a little bit of a bounce. And that's exactly what we saw today on Target. And just a couple other really interesting charts here that I want to go over. Some of the big cap tech are also signaling warning signs. headlines on the economy. Now, again, the question is this going to be a big pullback or a small pullback, right? Because we see NVIDIA actually selling off pretty nicely today. It did run into a resistance here and resistance here, so coming back in. So it's due for a pullback, 26% move up. Let's see what sort of pullback it gets here. Microsoft, same sort of thing. If we look at a trend line here, and again, guys, look at where this trend line comes from, back here to here, and we're right there, and then we take this low and we connect the dots right to here, and we're right at that point as well. And so again, it doesn't necessarily mean that we can't rally in a month or have a Christmas rally in like I said, a month or a couple weeks, but at least chart-wise, it looks heavy here. And I think the reaction to the PPI being so muted is also a signal we might have a pullback.
What should investors be looking at for tomorrow?
Yeah, so tomorrow we have jobless claims coming out, and the jobless claims number will be interesting because it's how many people are filing for unemployment. So it gives us a basis for, is the economy strong or weak? The lower the number, that's the stronger the economy, less people filing for unemployment. So that'll be what I'm watching. And then I really want to see, just going back to that spiders chart, that intraday head and shoulders, does it trigger tomorrow? Because maybe we do have a little bit of a sell-off coming into the end of the day. It looks like the market's closed and it did not trigger into the end of the day. So tomorrow we'll see if it triggers. But right now, this is a really beautiful 2-day head and shoulders pattern.
All right, Gareth, thank you very much. And you can watch Gareth navigate the charts in real time every weekday morning right here at 9 a.m. with the game plan. And that does it for us on this Wednesday for Trading the Close. I'm Toni Valliere.